Hey everybody, this is Curt Whitesell with WKRP&D Real Estate, and I've got Jon Hayes here with Hallmark Home Mortgage, and he is our company expert advisor on lending. And what we're going to do is ask him a couple of questions and get his opinion on things, kind of the today's market, and then he'll be available to field any inquiries if you have any more questions. So, hi Jon.
How you doing, everybody?
So,
Thanks for having me.
oh, we've had you. So, the first thing I want to know, Jon, is what are a couple of big challenges in buying a home right now?
All right. The biggest thing outside of just the paperwork, everything has to be documented. It's a never-ending stream of paperwork, but that's a given. The biggest challenges that borrowers are facing are down payment. That is, the guidelines are changing on down payment as of the first of the year. The federal government passed the Dodd-Frank Act, and the legislative arm of the Dodd-Frank Act is the Consumer Finance Protection Board, the CFPB, which goes into effect as of January 10th. Some things are already happening with the CFPB, the down payment that I mentioned. Conventional loans used to be able to go, that's Fannie Mae, Freddie Mac, used to be able to have a 3% down payment. No longer. As of this Friday, any loan with a new case number has to be a minimum of 5% down payment.
That could be a big deal.
That came into play a lot because FHA is so expensive now. With mortgage insurance, still a great loan, but if you have the credit scores, conventional is a lot cheaper at 3% versus 3.5% with the high mortgage insurance on FHA. So that's kind of significant for borrowers. We need that 5%. Unless you're going FHA, still a great loan. But if you've got great credit scores, you plan on 5%, and that is still better than going FHA.
That's a big one. Okay.
Second one, and this doesn't go into effect until the CFPB guidelines change January 10th. But any and all loans after January 10th have to meet qualified mortgage guidelines. All debt-to-income ratios on any loan is capped now at 43%. And so the net of that for the average borrower is you're going to be able to buy less house. You're going to need more money for down payment, and your ratios are going to be tighter. There's no more pushing things or trying to stretch them out there, which you're right. Probably we shouldn't do that, and a lot of us have done that. It's the name of the game. But you're going to be able to buy less house.
Okay. What programs are we not utilizing, Jon? As realtors selling to our buyers, what are programs? And I'm in my head, you know what I'm talking about, but I'm thinking like Buyer Assist, Indiana Housing, those kinds of things.
Well, I didn't write that down. There are still some good programs out there. You mentioned Indiana Housing. If you're lower income, and there are caps on this, there are guidelines. I believe for Marion County and the contiguous counties, metropolitan Indianapolis or central Indiana, I believe that for two people, the max is 59.9. With 3 children, it moves to 61 or 62. And I have to look those up. But if your income is below that level, then you qualify for Indiana Housing. Yeah. Indiana Housing has a program called the Next Home Program, where they will, in conjunction with an FHA requires a 3.5% down payment. But FHA says that 3.5% can come from you, from a gift from your employer, a gift from a family member, or a gift from a charitable organization. Indiana Housing is a charitable organization. They will give you 4% grant, okay, for the down payment. You'll use the extra 0.5% for closing costs. And that is a silent second mortgage, meaning you never make payments on it. You never have to pay it back as long as you keep the primary loan for 2 years. Okay. Can't pay it off. You pay it off in 2 years, you owe the 4%, but as long as you keep it for 2 years, you don't owe any of it back.
That's a phenomenal program.
It's a strong program. It's Indiana Housing Grant. Indiana Housing has a couple of different programs. They also have some incentives for doing energy efficient repairs or upgrades to a home. They also have what's called mortgage credit certificates, where if you qualify and your income is low enough, you can actually get credit on your taxes for paying the mortgage insurance and some different things. So it's selective. That program is hard to match people into. So let me see your lender for specifics on that when you get there. Some of the other programs that are out there, USDA and VA, are fantastic programs. We have a lot of a lot of veterans coming back. Just Veterans Day this past week. VA loan is still the best loan, hands down, out there. It's 100% financing for veterans. Rates are cheap. There is no monthly mortgage insurance on it. It's guaranteed by the VA. It's fantastic, and I think it's a great way to say thank you to all those men and women who've served our country. If you're buying way out in the country, and again, there are maps, eligibility maps, you have to look at this. Downtown Westfield does not qualify, but north of Westfield does. You get up towards Sheridan and out towards Greenfield and out west of Brownsburg. Some of these areas qualify for United States Department of Agriculture, USDA rural loans, 100% financing, very low mortgage insurance. The other programs, some things that we've got right now, we do have a quick to close program. If you've got a clean deal, we'll close them in 2 weeks. I think we've got one going right now that I took the loan up about 10 days ago, and I'm ready to close it today.
Okay, so the last two things are kind of one question, but I'd like to get your take on it. If someone's looking to buy in the next 12 months, what advice do you have for them, and what are going to be some of the challenges that they're going to have, other than what you're kind of talking about, or maybe you need to expand on that. But what do you think buyers over the next year are going to be looking at, and what should they do?
The biggest thing that I'm going to tell everybody is, if you know your target is to purchase in the next year, let's look at your credit now. You would be surprised how many people come to me and say, I've got excellent credit, and I pull it up and there's medical collections on there. And I can't tell you, it's higher than you would think, people who have medical collections. They don't even know they're there until we pull them up, and I pull the credit scores down. I encourage anybody to get with me, to get with somebody. Go to freecreditreport.com or www.annualcreditreport.com is the free congressional site. Call me. I'll work with you. I'd love to help you out. But let's take a look at your credit now. And if there's anything bad on there, let's pay that off. And if your scores are low for whatever reason, then talk to me and let me start coaching you so we can put a plan into place. The other biggest thing is save. You're going to buy a house a year from now, maybe you don't want to take that trip to Bahamas. Maybe you should have a couple less margaritas. Let's save some money, right? Let's put that money in the bank.
Good advice.
Because gone are the days of getting a check back at closing.
Yeah.
And you remember them, Curt. We've talked about this. That's not there anymore.
No.
You're going to need a down payment. And
you need cash to buy a house now.
God is my witness. You probably want some money in the bank after this thing closes, right? Just for a rainy day. So save. You're looking a year down the road. Let's save every penny that we can. Let's bring back the American dream. You know, chicken in every pot, your own house, a little money in the bank. Okay. The biggest challenges that everybody is going to face is just the things that we've talked about, the new guidelines, and they're ever changing. So my advice to everybody: save your money, work on your credit, and sooner rather than later, because we don't know what's going to happen down the road. And rates are low. Terms are still good. We don't know what's going to be here in a year, so get while the getting's good. Let's do it now.
So what you're saying is, get with a good lender, save some money, plan out, and get going.
That's what I'm saying.
Awesome. Hey, well, I appreciate you briefing us on this, and hopefully people that watch it, if you don't have any other questions, we did a good job. If you have any other questions, you can get a hold of John. I'll have the information at the bottom of the screen, or you can get a hold of me.
5 any day.
Yep, and we'll get you going. So thanks a lot. Have a good day.
Thanks, Curt. Thanks, everybody.